Hello friends, my name is Ramasu. Today we shall discuss about a topic that what is GDP. Friend, today's topic is very interesting, especially if you have interest in economics or you want to learn that what actually the GDP. So let's start, friend. First of all, I would request you please subscribe to my YouTube channel and click on the bell option as well so that my new videos can reach to you. Friend, GDP is an acronym for Gross Domestic Product. A country's gross domestic product or GDP is the total monetary or market value of all the goods and services produced within that country's border during a specified period of time. GDP is usually calculated annually, but it can be calculated per quarter as well. The US government, for example, release both a GDP estimate for each quarter as well as the entire year. Because GDP provides a broad measurement of a country's production, it is often thought of as being a scorecard for a country's economic health actually. Types of GDP, there are few different types of GDP. Nominal GDP is the simplest representation of GDP. This is just the raw data before any adjustment. GDP per capita measures the GDP per person in a country. This metric approximates the level of prosperity in a country. A high GDP per capita generally correlates with a high standard of living. Real GDP takes into account inflation to allow for more accurate comparisons of production over time. GDP growth rate is the increase or decrease in GDP from quarter to quarter. Balance of trade is a key element in the GDP formula. When a country sells more domestic products to foreign nations than it buys, its GDP increases. When it buys more products from foreign nations than it sells, called a trade deficit, GDP decreases. GDP, being an indicator of the overall health of the economy, is one of the many things businesses have to closely monitor in their operations. It is one of the bases of judgment in business expansion, workforce hiring, and many other crucial business decisions. Gross domestic product GDP is the total monetary or market value of all the finished goods and services produced within a country border in a specific time period. As a broad measure of overall domestic production, it functions as a comprehensive scorecard of a given country's economic health. Though GDP is typically calculated on an annual basis, it is sometimes calculated on a quarterly basis as well. As in the US, for example, the government releases an analyzed GDP estimate for each fiscal quarter and for the calendar year. The individual data sets included in this report are given in the real times, so the data is adjusted for price changes and is therefore net of inflation. The calculation of a country's GDP encompasses all private and public consumption, government outlays, investment, additions to private inventories, paid in construction cost, and the foreign balance of trade. Exports are to be the value and imports are subtracted. Of all the components that make a country GDP, the foreign balance of trade is especially important. The GDP of a country tends to increase when the total value of goods and services that domestic producers sell to foreign countries exceeds the total value of foreign goods and services that domestic consumers buy. When this situation occurs, a country is said to have a trade surplus. If the opposite situation occurs, if the amount that domestic consumers spends on foreign product is greater than the total sum of what domestic producers are able to sell to foreign consumers, it is called a trade deficit. In this situation, the GDP of a country tends to decrease. GDP can be computed on nominal basis or a real basis, the latter accounting for the inflation Overall, real GDP is a better method for expressing long-term national economic performance since it uses constant dollars. For example, suppose there is a country that in the year 2011 had a nominal GDP of $100 billion. By 2021, this country's nominal GDP had growth to $150 billion over the same period of time. Prices also rose by 100%. In this example, if you were to look solely at the nominal GDP, the economy appears to be performing well. However, the real GDP expressed in 2011 dollars would only be $75 billion, revealing that in actually an overall decline in real economic performance occurred during this time period. Friend, nominal GDP is an assessment of economic production in an economy that includes current prices in its calculation. In other words, it doesn't strip out inflation or the pace of rising prices, which can inflate the growth figure actually. Then, friend, all goods and services counted in nominal GDP are valued at the prices that those goods and services are actually sold for in that year. Nominal GDP is evaluated in either the local currency or US dollars at currency market exchange rates to compare countries' GDP in purely financial terms. Nominal GDP is used when comparing different quarters of output within the same year. When comparing the GDP of two or more years, real GDP is used. This is because, in effect, the removal of the influence of inflation allows the comparison of different years to focus solely on volume. Real GDP. Real GDP is an inflation adjusted measure that reflects the quantity of goods and services produced by an economy in a given year, with prices held constant from year to year to separate out the impact of inflation by or deflation from the trend in output over time. Since GDP is based on the monetary value of goods and services, it is subject to inflation. Rising prices will tend to increase a country's GDP, but this does not necessarily reflect any change in the quantity or quality of goods and services produced. Thus, by looking just at an economy nominal GDP, it can be difficult to tell whether the figure has risen because of a real expansion in production or simply because prices rose. Economist uses a process that adjusts for inflation to arrive at economy's real GDP by adjusting the output in any given year for the price levels that prevailed in a reference year called the base year. Economists can adjust for inflation's impact. This way, it is possible to compare a country's GDP from one year to another and see if there is any real growth happened or not. So friend, thanks a lot for watching the video. I hope you like this video. If you like it, please share it with the friends and colleagues, and thanks a lot for watching the video. Thank you, friends.